The U.S. labor market grew by much less than expected in October, according to a government report released Friday morning, providing the final major update on the state of the American economy ahead of Election Day. The U.S. added 12,000 jobs last month, according to the Bureau of Labor Statistics' estimate of the number of non-farm payroll additions. That falls short of median economists' estimates of 110,000, according to Dow Jones data, while it's well below September's initially reported 254,000 job additions. October was the weakest month for job growth since December 2020. The unemployment rate came in at 4.1%, matching economists' forecasts of a 4.1% jobless rate, where it stood in September. Bank of America economists Aditya Bave and Shruti Mishra identified several events which may have temporarily weighed down the size of the American labor force last month, including work stoppages stemming from severe weather events like Hurricane Milton and worker strikes, such as the Boeing factory worker walkout. Those distortions caused at least a 50,000 job reduction in payrolls last month, according to Bank of America, which also identified a 25,000 job bump in government jobs due to election workers. In the Friday release, the government said it's likely that payroll employment estimates in some industries were affected by the hurricanes. The unemployment rate is up noticeably from last October's 3.8%, indicative of the tighter conditions facing American workers and job seekers. But the jobless rate remains well within the normal historic range, sitting lower than it ever was from 2000 to 2016. The last report before Tuesday's election, the results are in for the labor market under President Joe Biden and Vice President Kamala Harris. From December 2020 through October, non-farm payrolls rose to an increase of 12%, and the unemployment rate dipped from 6.7% to 4.1%. Though the headline labor market data is unabashedly positive, the job growth and unemployment decline is at least partially a reflection of the recovery from the temporary shock of COVID-19 lockdowns, and the wage growth is muddled by the extended bout of inflation, with the Consumer Price Index up 20.1% from December 2020 to this September. For more on this story, check out Derek Saul's article in the link in the description.